Most traders think that the market is manipulated, that the big players are hunting your stop losses, and you have seen this word often used, that stop loss hunt, right? But what is the truth? Nobody actually cares about your trade. No one knows that you even exist in this market. So the market is not against you. There are no such big players, they are chasing your stop losses. It's just that you are not understanding how the market is actually working. So what I'll do is, in this video, I'll show you the real mechanisms behind the price movement. In fact, when you talk about the stop loss and why this is happening also, I'll tell you that's not because someone is chasing you specifically. And once you understand this, the entire trading perspective will change and you will come out as an entirely different trader. If you can understand this, and I'll take hardly 20-25 minutes and I'll try to cover entire price mechanisms which is actually happening in the market and try to understand this. And not only understanding, because knowledge is there everywhere, implementation is ultimately what matters, right? So before we start with, or let me start with a very harsh truth. The problem is not the knowledge. Just now also I told, and every other session also I'm telling the same thing, because you have access to everything. You know the indicators, you know the price action, you know the patterns, and everything you have the access also. And if you are someone who's willing to work, you will be getting everything. But the problem is, or why you fail, is because majority of the people, after knowing all these things, they'll try to predict the market. This is where the support has to be and this is what it should be. And if something goes against you, you start thinking that the market is wrong and I am not wrong because my prediction is right. So instead of understanding how the market move, or instead of reacting to the moves, you are trying to predict the market. And until you shift from that prediction to reaction, you will keep losing. This is something which I can tell you. So if you are here, if you are in front of the system and you are going to trade, means never ever try to predict the market. Only thing that you can do is you can react to what you see in the chart, right? So this is exactly what you should be doing. And everyone coming to the market, they all want to make money. Everyone who come to the market, they all have studied it. At least 90% have studied. 10% may come randomly and take trades. But the success rate also, if you see, it's hardly 5 to 6%. Right? So the wrong mindset is what I've told you. What you need to first understand is, it's not about making profit. See, I'm never concerned about the reward that I'm going to get, because you are not going to make it. It is a market which is going to give you. You're not going to make profit. It is a market is going to give you the profit. Your only job in the market is to control your risk. For example, whenever you see my videos, I always talk about breakout trades. I don't chase it. I may miss many trades in front of my mentees also, in the live sessions also. I see the breakout, but I just sit there. Some people think that, you are afraid of chasing. It is not because of that. I don't look at the reward. The breakouts, if it is successful, it can give you 5x or 10x rewards. But the breakout trades, if I chase, the risk is so high for me. So I only look at that candle and I only look at that risk potential. So if the risk is higher, irrespective of the reward, I'm not going to enter into that trade. If the risk is lower, if the risk is within my limit, then only I'll enter the trade, irrespective of the reward again, whether the reward is going to be small or whether the reward is going to be higher. But first and the most important thing that I look at is the risk. So breakouts, I'll never chase. That doesn't mean that I'm against the breakout. I am never going to chase the trend, because if you try to chase the trend, then you will end up in losses if you take over a period of time, because you may enter by the time the trend is getting exhausted, or you are going to enter a fake breakout, right? So I try to avoid that, because when I look at it, the risk is higher. If I look at it from the reward perspective, breakout trades can be better rewarding also. But again, if you look at the perspective of probability of winning, the chance is actually less. Breakout probability of winning is 20%, losing is 80%, and risk is also higher. So what is the logic in entering that? But that again, let me tell you, I'm not against the breakout. I go for the breakout, but only if I get a healthy pullback after the breakout to 20 EMA or 9 EMA or the super trend 14 2, which I keep depending upon my setup based on different instruments, because breakouts in different instruments will behave differently. So we have different setup for example, gold, I'll take one setup, crude oil, I'll take one setup, Bitcoin, I'll take one setup, and index, when I take one setup, right? And 20 EMA is something which you can rely upon in all case. That's why I've discussed about 20 EMA pullback. So I'm not against breakout. Only thing is that if I see the breakout, the winning probability is less. Secondly, I only look at the risk. The breakouts may give you 10x or 5x or 20x. You might see such kind of moves also happening. But unless I get a pullback, If I enter, the risk is higher. If I get a pullback, my risk is lower. So only thing that I look after is the risk that I'm taking for a particular trade. So you need to understand how you lose, how much you lose, and why you are losing, right? And whether it is a bad process or just a bad luck. Because see, if you don't find your process, you will repeat the same mistake again and again and again. So if it's a bad process, you can change that, right? So again, I've seen two types of traders. This is what I've just before also mentioned: trend traders and counter trend traders. You might have seen I take a lot of counter trend trades also. For example, I'll briefly give you example with Nifty, Bank Nifty, and Sensex. What are they? They are the indices, right? And that's the heart of the economy of the country also. And indices, we take care like anything, right? Circuit breakers are there and everything is there. So you are not going to get a move like what you see in gold or what you see in silver or what you see in commodities or what you see in crypto or Bitcoin. You can't see 20%, 30% moves like that. So index, if you're trading, for example, Nifty, it will be in a range, right? Now think about this. If I need to chase a trend, which one will be rewarding, index or commodities or crypto? Commodities and crypto, it will be more rewarding. Index, most of the cases it will be sideways. For example, if I'm trading Nifty, if Bank Nifty is up, you will see the trend will be like this. Nifty IT will be sideways or down, because you want to keep it in a range. You cannot see that is going faster on the upside or again on the downside. You won't see certain levels are breaking. So support resistance are important, certain indicators are important. And if you see, if I'm trading Nifty, Bank Nifty, Sensex, etc., I use a lot of mean reversion trades. I take a lot of counter trades, especially if I talk about indices. I talk a lot about R3, S3 of Camarilla pivots, where you get reversal trades. If I talk about commodities and crypto, I talk about R4, L4 of Camarilla pivot that give you the breakouts and breakdowns, the best of the trades. So different instruments, different setups. Some are trend traders, but the problem with trend trading is low win rate if you chase the trend. But if you wait for the pull, I'm not against trend trading. I go with the trend only. 90% of my trades are with the trend. I advise this only to my mentees also, but never chase the trend, never chase the breakout. Let it come to your level so that you minimize the risk and then you can look for good profit. So when you chase the trend, the probability of winning is less, but the big profit possibility is there. Same is the case with breakout. The probability of winning is less, the profits are big, losses are also very big, right? The risk reward sometimes in paper it looks good because you get 10x, 20x like that, but reality will be different because if you see the percentage of win, it is less. But what about counter trades? I enter, let's say I see a support. I got a hammer candle there. Just below that is my stop loss. I enter. I may have to take 2, 3 entries, but the win rate is higher, right? And also you will get bigger reward as well here. But sometimes you will have to take more losses. Sometimes more stop losses will be taken out also. So these are the two different trades. Both are successful. Trend trading, you can become successful if you're not chasing the trend. You need to understand this. See, sometimes I'll miss the move. It's okay for me. But if I can wait for a pullback, I get best of the trades. If I'm a trend trader, if I'm a counter trend trader, the thing is that I have to be very strict, ruthless, and brutal with the stop losses. If I'm entering based on support resistance, R3, S3, right? I see the hammer candle, I enter on a upside long trade, I keep below that as a stop loss. Then the stop loss, I'm controlling. So that is how you will be managing, right? Understand very clearly. There is no strategy which is wrong. You chase the trend, no problem. If as long as you can manage the risk, right? I have seen many traders who are chasing the trend and making good money also, scalping the momentum and scalping the immediate moves that you're getting. Everything I've seen. So it again depends upon personality. It depends upon strategy. It all depends upon the psychology and how you manage it. But what I advise to my mentees, yes, you go with the trend, but never chase the trend. Go with the breakout. Never never chase the breakout. Wait for the pullback. 20 MA trades. If you can give more trades, you'll start winning normally. And if you don't want to, you can avoid the counter trend. Even in the mentoring session, I show how I take the counter trends, how counter trades. But I recommend initially not to take. But once you get that experience, you can try the counter trades because you need to be very ruthless and brutal with your stop losses, and you will see taking stop losses often. if you're taking counter trades. Trend trades, that's not the case. Trend trade, the problem is your stop losses are longer. Reward also, you keep getting profits also, but when it comes to counter trades, stop losses are smaller and it take often. So both are different strategy, and based on the instrument that you're trading. I chase the trend if it is gold. I chase the trend if it is crypto. I never chase the trend if I'm trading indices. If I'm trading stocks also, to an extent I chase the trend. You need to understand what instrument you are trading. Index means there is a range. So you cannot blindly chase the trend. You will get the reversals. You'll get the pullbacks. So try for the reversal. Try for re-entry at the pullback. If you're not trying for a counter trade, try for a re-entry on the pullback rather than chasing the trend once it's over. I hope this is clear. So this is not only for those who are trading indices. That's why I told you there is a different setup for a different instrument. Commodity, the gold will react differently and the cryptos will react differently, right? There is no strategy which is wrong, but the strategy, you know, that the way you are using is what ultimately what matters, right? So see, you if you cannot handle the five, suppose your probability of winning is 70%. What does that mean? There can be 3 losses in the 10 trades, there can be 30 losses in the 100 trades, and that 30 losses, out of that 30 loss, 5 loss can come in a row also. And if you cannot handle that, then there will be a problem, right? So if you see trend trading, the probability is very less also. The success rate is, I think, around 25%. But the the risk reward is high. But why I need to bet on something where the probability is less? But the same breakout trades or the trend trades, you wait for a pullback, then the probability significantly increased to 60-70%. So can I bet on that? Yes, I can bet on that. That is why you will see, I sometimes take the trades, but that doesn't mean that, you know, you have the same risk appetite and you will go for it, right? So sometimes you feel like this is a move that is for sure, it is not going to give a pullback, then you will try to chase that. But even then, it is better to avoid that, because your strategy, your system is, I'm not going to chase this because I look at that breakout candle. If I need to take a stop loss, it is ultimately the breakout candle is the trigger candle. That's my stop loss. That's long, that's big. I cannot take such risk. But I will wait for a pullback. If I get, I'll enter. If I don't get it, I won't enter. Counter trades, these are very good trades if you know how to execute and if you know what instrument you are trading. In a crypto, I cannot go and take a counter trade by looking at a breakout. But in indices, if you can understand this, then you can do. That's why I always tell you, spend time in the market, 6 months, 1 year, and see how someone is trading. Even with our live mentoring sessions also, you'll see how we are trading for the 6 months. And then automatically things will be inculcated in your mind, in your brain also. And you will start reacting to that rather than you start predicting to something, right? So, and one more misunderstanding is everyone is thinking market has huge liquidity. It's not the case. Liquidity is there, but it's not there every time, right? You see, at any moment, you can see sometimes liquidity is extremely low also, and that's why even small orders can move the prices. So in that case, your stop loss matters, right? This is where everything actually start making sense. Sometimes price moves so fast also, even without volume, even with small orders also, when liquidity is less. So what you need to do is, you need to have that proper stop loss. And everyone is talking about market is hunting my stop loss. To whom my students will never talk about that. My students will never say it's a stop loss hunting move. My students will never say, these guys know where I place my stop loss and they have taken my stop loss. My students will never say I lost because I'm unlucky and I made it because of lucky, because there is nothing like unluck or luck in the market. It's about a system that you follow. And when it comes to a system, there is nothing like luck or unluck. It's probability, it's numbers, it's math. And you follow the system. And the system, if it is having edge, it will reward you. If you're following a system, if it is not having an edge, it won't reward you. And to get that reward, you need to give more sample size also. So there is no luck, there is no unluck. Losses are part of the system, profits are part of the system. Big losses are not at all part of the system. Everything else is small loss, small profit, big profit are part of the system. Trailing stop loss is part of the system. Taking profits partially are part of the system. So if the system work and if the system have edge, and then you will win. It's not about luck, it's not about unluck. If you are even thinking that I'm lucky or I'm unlucky that my stop loss is taken, then you're not a trader. You can never be successful in trading unless you understand that there's a game of probability, and this is how it is working, and this is the edge, and this is the way the edge have to work. And the edge have to work means I have to give enough sample size. 100 trades I have to take to know whether this edge is working for me or not. Right. So market is not hunting your stop loss. Don't ever think that, don't ever talk like that. That's why I told you my mentees will never do that. What actually happening? Because see, traders will place a stop loss at the same level. Logically, 20 EMA you may place a stop loss, or 9 EMA you may place a stop loss, or VWAP you're placing the stop loss. And the algorithms know this already. So no, naturally the price movement will be there. The triggers, will be hitting, and automatically liquidity will be created, right? So there are many who are placing the orders also at that level. Stop loss orders are also very close to that. And sometimes you will see hitting the stop loss and the further orders at getting triggered and it get reversed. It's not that they came and taken your stop loss and the market is going up. That's it. There is no conspiracy. It's the structure of the market, and you need to understand the market. You need to understand how the market is working. Then you will never say my stop loss is taken because big player no, or Zerodha leaked where I placed my order. Nothing like that, right? Now, one thing that I always tell to my people is you are a small fish. So you cannot create a market move. You can ride the market move. Who are the creators of the market move? The institution. They are the whales. So the whale is there. You need to go with the big fish. You need to swim along with the big fish, or you can even stay on top of the big fish and you can easily move also. So the institutions are the whale who's creating the market move. Retailers, you, me, and everyone, they are the small fish. And you are not here to predict the market. They will predict the market. They will make the moves, right? You are not here to fight against the market also. You are only here to ride the wave. Simple. When the big money moves, you move with it. You need to identify which direction the big money is moving. Ride in the same direction. That's the only thing that you need to do as a trader in the market to become successful, right? So what you need to do, you need to identify those liquidity zones. You need to know where the demand supply is there. You need to know where the reversal can happen. You need to know where the trend could resume. And you need to know, or you should be waiting for a sweep, right? And you will be entering after a confirmation. And you enter. After that, you ride the momentum. This is what you need to do. Find the liquidity, wait for the sweep, enter after the confirmation, ride the momentum. Why this work? Because you are not entering early. One thing, you are entering after confirmation. You are entering after the institutions, and that is your edge because someone is there to support you. That is one edge. Even if you have this edge alone, you'll make money in the market. Forget about other edge and other systems and setup. You are just using the edge that you are riding along with the big fish. So the door that the sea is open in front of you, you can go along with him. Even if you have that edge only, even if you identify this is where the move is, you move only with that, you are successful. That edge will work in your favor, right? So see, earlier we have seen, these double tops, double bottoms, and we get in fact, once it comes to make a bottom, and then again coming and making a bottom means that we consider as a high probability setup, double top, the M formation or W formation, double bottom. These are working very good. So that's the areas where you can look for reversal trade also, right? There could be a single sweep and that give a move. Now, if you see, there will be a sweep and then there will be a fake move and then there will be a second sweep and that give you the actual move. That's what the double top or, double bottom is all about, right? So sometimes the stop loss is getting hit once, again they move to that level, and then again the reversal. That's what double top. I hope you got that connection, right? So what ultimately algorithms is doing, they buy slow buying, and they try to push the price lower so that they'll get the better entry. So see, market is evolving, and that's how even the algorithms also working. Now the biggest mistake that people have is they don't have the exit plan. Most of the traders have the entry logic, when they enter with the, like all these I've told you. You look at a mean reversion possibility, you take a trade. You look at a pullback to 20 MA or VWAP or confluence, you take a trade on the basis of trend. You got a breakout, you wait for the pullback and you take a trade. So entry is done with logic, but Exit, you do with emotion. And that's why, again, you fail. So everything need to be a system. Everything need to be a part of the system. Half of the system you followed, half you don't follow means the edge won't work for you, right? The rule is very simple. Exit must be predefined. It should not be decided during the trade. During the trade, you get emotional, especially when you're dealing with money, right? And also, when it comes to stop loss, don't blame that someone have taken my stop loss after placing stop loss at the support level, like the round numbers 23,800, right? Or 22,800, 23,000, or at exactly at 20 MA or VWAP. These are support levels. This is where liquidity is. So it just come and hit your stop loss. Someone else buying order will get triggered and it will go up further. So you need to be like unpredictable, thing like smart money, and maybe 10 points below that VWAP or that level, or within a box, just keep slightly away, give some difference also. That's how it should be done. And see, only thing that I want to tell you is that market is not predictable. If you try to predict it, then there is a problem. Maybe I can say partially predictable based on the system and partially random. But what is your job? Your job is not to be right in the market. Your job is to find that consistency. Your job is to go along with the big fish. Your job is to react to what is actually happening. You have seen a move and you need to identify whether the big fish have entered here or not. If so, go with that, and always wait for pullbacks. Always look after the risk that you're taking in a trade, even if the reward is bigger, but risk should never be bigger. Remember, you can have small loss, big profit, small profits. You can never have big loss. But if I chase a breakout, I'm violating that rule. The loss, if that is a fake breakout, the loss is going to be big. I cannot control with the small loss. So reward may be bigger, but that is violating my rule of big loss. I cannot have a big loss, right? So let me tell you, trading is not about predicting the future. Trading is not at all about predicting. It's about reacting. It's about reacting to what is happening right now. It is not about Nifty can go to 27,000 and I'm going to take a trade on the upside now. No, it's about what is actually happening now. That is what you need to consider. And once you understand this, you stop chasing the trades and you start executing the trades with clarity. So I hope what I mean to tell is very clear to you. I see you in the next video.